You know that about a year, 2 years ago, I was actually saying, look at this. Look at this. You know. You know.
It will give you a precious business, truly precious. Look, with $700,000, you can do a couple of fix and flips. You can buy rental properties and you can lend capital. And in a year, my brother, you will have created an empire.
Would it be the next brother? Sir, should I send him a message? Yes, Dan, I am happy I had the conversation. She's 700.
I made approximately $297,000. I have about 7 properties in San Carlos. And 97 is what I told you. I made a thread about my house. It's like a mortgage. And with that, I worked, and now I have 7 real estate properties. Because it's like a credit card. In fact, actually, basically.
But of course, if she receives rent and pays that back, the important thing is to be very diligent. The thing is, they pay less interest if you use a 10 and a loan. So it will depend on what you really want. But for a fix and flip, it's perfect. Now, there's another topic. Look at this. If you make a thread, you took out the money and now you buy a property. And do the car method. What is the car method? The bank gives you. A simple example, the property is worth $100,000. The bank is going to tell you, I will lend you $90,000. Bring me $10,000. You bring that $10,000 from your funds and the bank will finance the rest, 100% of the construction. You only brought $10,000 plus the closing costs. And now you renovate the house, and let's say the house is now worth $300,000. Hypothetical example, the house is worth $300,000. You have 2 options. Either you sell it or you keep it as a rental. If you keep it as a rental, the bank will tell you they will give you 75% of the $300,000. They will put $225,000 on the table. What happens? The house cost you, yes. You put 50 into renovations, but of course that money came from the bank. You only put in 10. We're clear on that. And now the bank tells you, I'll give you 225. We pay the 150 you owed. You keep $75,000 in your pocket and you pay back your loan. So the house didn't actually cost you nothing. They actually paid you $75,000 to buy a house. Well, it cost you $10,000. Let's say they paid you $65,000 for buying a house. And now you have a house that is generating monthly cash flow. And what do you think is going to happen? That house is worth $300,000 today. In 5 years, how much is that house going to be worth? $500,000? And you will have the same problem you are facing today. Now I have 200,000 stuck. Let me take out another thread or another loan and repeat the process in 2 or 3 years. And of course, I'm explaining it one by one. You don't have to do it one by one. With the amount of capital you have, you buy 20. Now, in 5 years, you have 20 problems with 20 threads. Now you pull all that equity back, repeat the process, and now you have 50 houses, and then repeat the process. And when you come to see it, that's what I tell people, folks, let's accumulate properties, let's accumulate, let's accumulate, let's accumulate, let's accumulate. I want that in 10 years, you tell me, Alexis, I have 200 million accumulated in 2021. You know that I have 300 million, and you know that I have 100 million, and you know that I have 100 million. You know, let's gather $1 billion, create a loan fund, and start lending money to the new generation that is definitely going to do fix and flip. While we sit back signing loans and receiving millions of dollars in absolutely incredible passive income.
I met a very wise and experienced mentor in the bustling city of Los Angeles. And he advised us to purchase a single share of a diversified fund that consistently invests in the SP index every single month. I have been there emerging for about 6 years now. I already have a good amount of capital there. Well, it is earning, and that money is liquid.
You can withdraw it at any time.
Yes, but I don't want to withdraw it because we made a plan with the group. We agreed that in 5 years, we will buy 500 shares, and then we will leave them for another 5 years, so that in 10 years, it will give us 1 million, and from that million, we will have enough to eat and no longer have to work.
That was until this weekend. Now that I am seeing here the lady who became a millionaire and achieved financial freedom in a couple of years. So, What I'm seeing is that I'm going to take some of that money out and I'm going to invest it in. Look, I met.
It will depend on what you want to do, right? Look, I met a girl. I just remembered three girls. She is a woman, baby, an aunt, 19 years old, who partnered with someone who lends money. She learned the lending business and started by lending $20,000. Nowadays, she makes millions of dollars. She is 22 years old and earns millions of dollars a year. I met another young girl. Two young people, 24 and 25 years old. They partnered up, had their primary residence, and had $200,000 in equity. Did they go to the bank, get a loan of $200,000, and know what they did with that $200,000? They went out to the street to knock on doors every time they saw a construction project. You know, you see the dome outside, to see the contractors. Do you ask, hey, are you doing this project or are you working as a contractor for someone who is doing a fix and flip? No, I work for someone who does fix and flip. Give me the phone. Hey, so-and-so, I have $200,000 to lend. Would you like me to lend it to you for your next project? What do you think the guy was going to say? It's clear. And they started with 200,000. Nowadays, they are 27, 28 years old. They make millions of dollars. They have a business called Harmony Lending. They started with $200,000 that came from a line of equity they had in their property. And today they have a business called Harmony Lending, providing capital. They make millions of dollars. And what happens if I lend her the money and the project fails? I lose money. Why, perhaps
But she has to pay. Take the house.
I am not going against her. I am going against the house and what I do with that house. Now I either finish the project or liquidate it and recover my capital. Note, first position. Because if you lend in second position, the bank will give you first position. The bank that is in first position has priority in a foreclosure.
I have a question. If you choose it as they say, can you only take out interest? Or is it normal?
Okay. Do you know what the concept of interest only is? Interest only, it basically depends essentially. There are banks that offer interest only. The type of loan that is most suitable for interest only is like a credit card, right? Let's go back. That will depend on the type of project you are undertaking. If it's a fix and flip, it's fine. Because even if you only pay interest, no amortization, you just need the capital for when you sell the property and you return the capital in full. Okay. Now, if you are going to rent, it is not advisable. However, in multifamily properties, interest only is very common, but it is a completely different concept. Why? Because the multifamily properties you are looking for, remember that a mortgage payment consists of principal and interest. What happens? If you eliminate the principal portion, you are only paying interest. So if the payment was $1,000 in principal and interest, and now I eliminate the principal, let's say the principal was $100. Now I pay more than $900 in interest, and the loan is interest only. I have $100 more in my favor that I can keep for myself. Okay. And that is something you need to take into account in the underwriting. The house is not going to the loan. It is not going to amortize. It is not going to lower the balance. However, you are looking for cash flow. You want it to generate more cash flow because maybe in 6 months you will refinance, or in a year you will sell, or in 13 years you will refinance. But your interest is not in amortizing the balance. Rather, your interest is in having more cash. That's an example. Maybe you say, no, I am interested in paying down the principal. Personally, in a residence, I am interested in paying down the principal. Why? Because look at what happens if I buy the house for 100,001, for example, and the house is worth 150,000. I have 50,000 in equity in my favor. That's it. If I am amortizing the principal over 5 years, is the debt 100,000 or is it less? It is less. I owe 80,070. It's going down. But the value of the property is 150,000. So I am creating a gap in my favor because you are amortizing the principal. The property increases in value. You are creating a spread in your favor on paper, but nothing happens because he has a big problem. Do you have $700,000 on paper? But how many of us here would like to have that problem right now? What we needed was simply the knowledge that is being provided here at the table to withdraw that money, Yusan, and start doing the business. That is a tremendous good problem.
That is the problem you have. You tell me too much.
You know that about a year, 2 years ago, I was putting like 500 on each main table for it to be done. Like,
look at this. Look at this. I'm going to give you a precious deal. A really precious one. Write it down, precious. You made 700. Don't risk the 700. And of course, I'm going to give you a business that isn't risky. but let's say diversify that capital, right? And you take out 100,000 and the increase goes down. Anyone here will tell you, I'm going to lend you the money, but I'm going to lend it to you in first position, not second position, so that you have priority with zero risk. Okay, I'm going to lend it to you in first position. And second, assuming the bank approves you at, I don't know, 9%. I'm just making up the number. You are not going to lend it at 9, you lend it at 15, at 18%. Ready. Now you are earning 8% on money that the bank gave you. Ready, with zero risk. Because if she fails the project, you keep the house and either continue the project or sell it and get your capital back. Now, if you take out those 700,000, take out 100, 150, take out 100 or 150 to do a fix and flip, take out 100 or 150 to buy rental properties, take out 100, 150, with 700,000, you set up 4 businesses within the same real estate industry.
I only have one property from that business, a big project now, but I didn't know. I hadn't learned that much. Right now, just a little. Thank you.
But look, I think we all go through the same thing. It happened to me too. No, I believe that. When I understood that the brain is a muscle, and just like I go to the gym and exercise to develop muscle, I have to listen to people who have more advanced knowledge to develop this muscle. And I really believe that it all comes from the jealousy that I am already tired of being seen in a different way. The potential is impressive. So let's go back. I mentioned it to you yesterday. What is the community or the culture? Culture, community, with the highest number of contractors. We are not the Latinos. Latinos have a lot of capital, 700,000. There is a lady around. She gave me, I don't know how much she gave me, 300,000 under the mattress. I don't know. Someone gave me the other day. In other words, people are the same time and again. The capital and resources are there. The only thing missing is the knowledge. Look, she has $100,000. She has the experience. She has done the business. And she was just missing a small detail, which was knowledge to continue moving forward. And it would have really been very sad on my part to have kept that information to myself, not giving it to her, and letting her remain stuck. At the end of the day, neither I benefit, she doesn't benefit either. We do nothing. We don't create a legacy. Do you know that the day we go to the grave, we won't take anyone with us? Nothing, nothing, nothing.
We take nothing with us, people, indeed nothing, to the grave, because absolutely all knowledge is truly there.
Likewise, Hispanics need to learn to share our knowledge and experiences, because when we share, we grow together.
And do you know what the Jews do? They don't unite themselves. The Chinese don't unite. The Hindus don't unite. What about the Latinos? Why so much division? Why so much separation? Forget about envy. Forget it. Let's come together and conquer this world together. We have to understand that I alone will never be able to do it. I mean, we need to unite and conquer this world together.
One question, sorry. Right now, what I heard you say, for example, about the girls, right, that they were young. They went, for example, where there was a construction. Who is doing the construction? Maybe they asked the contractor, but he was not the owner. They gave him the phone number of the person doing the construction. He is the owner, and we are going to put it there. Of course. Okay. What if I asked if I were to do the same, right? But of course, I would have to do something there, but a title. But it's for you to lend the money. Correct.
Okay. Look, I recently gave a mastermind, specifically a full class from 8 a.m. to 5 p.m. on how to lend money. And it's a deep topic, but I'm going to answer the questions 5009, and I think I mentioned it to them recently. There is an instrument. Okay, let's go over the basics. I will try to break it down simply, like a Puerto Rican would say, in rice and beans. When you request a loan, the bank, no, let's look at it from the other side of the coin, but we request a loan from the bank. We typically ask a bank for a loan, and the bank usually places a lien on the property. That name is called mortgage, or it is called dirt or trust, or it is called security of deed. The name will depend on the state where you are buying the property. Okay. That instrument is what essentially allows the bank to actually execute the house if you indeed, in fact, stop paying for it. Parenthesis. I have seen many Latinos lending money and they tell me, no, I made a promissory note. No, I made a JV. You are married? You got married? You got married? And put the agreements on a napkin. Or you went to church and went through the whole process and you are registered as a marriage. People, when we do business, we don't do napkin business. In general, a promising party and note are the outlines. They are the agreements written on a napkin. But the county, what it needs to execute the house, is the trust or the mortgage or the security of deed. Is this the official document that the bank actually signs for you when you take out a loan to buy your residence? No. Those 1,000-page documents that you sign, within those documents such as, is this instrument for me to place the lien? Now let's move on to the question she asked me. I have capital. I want to lend capital to someone, but I want to do it in a safe way. Why? Because I want to have zero risk and at the same time have a return on investment. Because folks, the most lucrative business or the most profitable industry in the entire world is the financial industry in the US. In Colombia, in Chile, in Peru, in China, in any country, it is the most lucrative industry. What do? They know the business. You do not know it. I'm going to explain to you what the business is. It is very simple. After identifying the opportunity, the $100,000 or $200,000, regardless of the amount, ready. You are going to put this lien called a mortgage. Find out what it's called in the state you are in, Texas. I don't know what it's called there. You can Google it or ask ChatGPT. Then it will tell you. And you will do this with a title company or a lawyer there. Are they title companies or title lawyers? Go ahead. Done. Nothing. You all investigate that part. I don't own property in Texas, but you all look into that part. Okay? The important thing is to understand the concept, right? And the lawyer is going to make a record. Register the mortgage against the property, which is called a mortgage, or depending on Texas. Let's say you lent her the money. Okay? For some reason, the project failed. She is bad. No, people. When COVID hit, I was in the middle of a fix and flip. And what happened to the whole world? It came to a standstill. Okay. And in this country, hurricanes and earthquakes occur. It's not necessarily that the operator fails. There are alternative circumstances. Important. I just remembered something. You are going to have that document. Make sure she has insurance because if the house burns down, your money is at stake and you need to collect the insurance and your name has to be on the insurance. Okay, that's what banks do. Because if the house burns down, now you have the authority to claim that money against the insurance. Okay, ready. So now you are going to record that document with the title company. Okay, and you have the lien in first position. Be careful. If she takes a loan from another bank and now asks you for capital, you have the right to do so, but you are lending in a second position, which means that if the bank forecloses, they will give first position or priority to the existing bank. Okay? And you would be in second position, which means that if there is leftover money, then there is a little something for you. Okay? And that is very important to keep in mind. Ready? Answer your question. Another very important topic. If you are very interested in lending, you should never lend based on the future value of the property. They say, no, the property is worth 100,000 today, but I need 200,000 as the future value is 200,000. You do not lend money based on future value. You lend money based on current value. Why? Let's say what banks do is they don't lend you 100%. If you are buying it for $100,000, I will lend you $80,000. What happens if you have to go to a foreclosure and it sells at auction for $100,000? Well, you recover your $80,000 and with the other $20,000, you pay the attorney fees that you had to incur to execute the property. And Texas is a tremendous market because the moment you stop paying for the house, it goes into foreclosure immediately. There are two that take 9 months, but the lenders that lend in Texas, a tremendous state, because as soon as you make a payment for 1 month, you execute and recover the money immediately.